We'll spend $1 million building a company and sell it for 50 every day, twice on Sunday, right? That's a 50x return. Hello, and welcome to another one of these fantastic Nobody Specials, where we're spending time with leaders in the venture studio space across the globe. We've had great conversations about the futures of venture studios, why people think that they're even the private equity examples for early stage startups. But today I've got a fantastic guest who's not only built one venture studio, but almost built a portfolio of venture studios, primarily focused in the hardware arena. He's been a strategic advisor for many studios and investors over the last number of years, Mr. Denis Kovalevich. And it's great to have you here. Denis, how you doing? Welcome to the show.
Hi, Barry. Thank you for inviting me. Hi, everybody.
Yeah, look, it was always a pleasure to get you on, right? I know you yourself have someone who's a very, very unique experience in venture studios, having built some of the earliest venture studios, but almost then built out this portfolio, if you will, of helping many people build studios over time. And this sort of new place that we're starting to see in this emerging asset class, we've so many questions that people are sort of asking, and you've even written a book about it as well, which has just recently been released. So I always love, having the opportunity to have people on to share those stories. So can you tell us, just for folks who are probably not familiar with your sort of story, tell us how you got started in venture studios, and what was the initial spark that got you interested in the space?
Good question, Barry, because my first startup studio called Techno Spark. So it was a really spark. Yeah, me and my partners, we started it in 2012. And the basic territory where we did it was Russia. And we did it not far from Moscow, but also in other scientific towns of Russia. And there are a few in different areas. So through the 10 years, from 2012 to 2022, we built up quite a network of new studios in 8 different regions. As you said, it was fully focused on a material-based startups, let's say hardware, DeepTech, you name it, robotics, microelectronics and semiconductors, solar cells, and up to genomics and medtech. So very different areas, but always around some hardware mostly. And what was the main spark, I think, is to launch and build, but not just to select and pump. So we wanted to play a role of entrepreneurs, not only supporters or not just an investor. So that, I think, the basic concept of a venture studio: to build, to launch and build, and then to sell startups. So from my point of view, it's more looks like a conveyor. Some of journalists called it in 2015 conveyor of innovations. So we do startups as production, in a production mode.
Yeah, I think the factory model is one that comes up, quite a lot when people are thinking about studios just in general, right? And it was one of the things that was always fascinating to me as well. I'd started much more in independent startups, like single traditional startup, have an idea, build it. But I was always fascinated by the possibility of how could you do multiple companies in parallel, or how could you bring all the expertise of lots of entrepreneurs together to sort of experiment with lots of ideas in parallel and test them quickly, find out what works and what doesn't, and build all these capabilities to sort of support the entrepreneurs so they succeed. And then on the other side of that, from the investment side, it becomes very interesting as a diversification strategy for investors, right? They're essentially buying into the factory, and the factory is going to create lots of different products. So, you really only need a couple of the products to be successful, and the factory becomes extremely valuable. And so this was something that was always really interesting to me. But your unique perspective, especially in the hardware realm, right? When people often think of building hardware products, they're thinking long feedback cycles, very difficult deep tech type building software with the hardware. What were some of the unique challenges that you sort of came up against when you were sort of building in that space, and sort of inspired you to say, this is actually, I want to create lots of these different types of studios to explore many different aspects of especially hardware building?
It's also a very good question. I think the most challenging point was, of course, fundraising. Fundraising for a studio, not only for startups, but for a studio, to launch a studio itself and then to scale up it. And I think that is a basic problem to be true even now for most of the studios that I meet globally in any parts of the world. Because after 2022 and this terrible war in between Russia and Ukraine, we finished all the businesses there. And last 2.5 years, I work in Israel, in Europe, in US, and so on different countries. So the most difficult was to find fundraising for a basic startup studio. And I think that is a question that basically it's better to discuss now, because there is simple arguments why to invest. Of course, it's first is what everybody is thinking about is a foundership, founders equity. Yeah, studios any studios are getting founders equity because they are launching startups. So we can name the institutional co-founders. I think one of the best definition of the startup studio. If we launching startups, we are getting this founders equity. Then we starting to look for a founders in residence or entrepreneurs in residence or a new co-founders. You could name it in different way, but always we are looking more for people who could do exactly those ideas that we decided to make in a form of startups. By the way, I think when we work in DeepTech, it's very important to have some focuses in verticals.
Yeah.
We had, of course, something. To be true, we started more agnostically, but in hardware. And then as more we build startups, as more we were getting focused. So my history of focusing was like more essential than artificial. So it was not the decision that only, I don't know, robots or only semiconductors. No, we started from different areas. But then when you build more and more startups on top of previous startups, you create new startups through the building previous ones. And I think that is one of the very important source of ideas in startup studio. You are getting more and more focus. And in DeepTech, of course, it's extremely important to be focused because, I don't know, robotics in logistics. For example, we build the main company in this region that produce and sell the robots for warehouses and so on, like Kiva Systems in US for Amazon. And for example, flexible electronics is dramatically different areas. And you need to make a bunch of startups in each of these areas in order to be successful as a studio. So that is why in some years, in 5 years, in 7 years, we got this, let's say, specialization or focusing. But in each focus, we could make different types of startups. Like we build the whole value chain sometimes in area of, for example, in area of solar cells. From one side, we build startups that produce the solar panels for roofs or solar windows. But on another hand, we did the startup that trying to make the special insurance product for a solar. So it's different areas, but so it's different topics, but it's one vertical. You need to build all of them in order to make these ecosystems of startups. I think that is also quite an advantage of startup studio because they don't care of how many startups you are building now. And that is important. It's not like venture funds who have to decide how many, 15, 20 startups to invest. Startup studio at the end could get 100 and more startups. Look on the Rocket Internet or I don't know, on a Hexa now or I don't know, other studios, large studios. You will see such numbers.
Yeah, no, it's great, and what's really fascinating to me is just, even if we draw out the analogy of the factory, you start a factory to create one piece of machinery maybe, and it creates that. But when you start to put it into an entire value stream or a supply chain, even more importantly, that's where it becomes even more powerful, and it's the way I tend to think about even the investment side, like us as venture builders, where we're coming up with ideas, we're iterating products early, and we're sort of the beginning, we're the first factory in the supply chain. And then when we create these great products that, you know, maybe early stage and in their infancy, but that's a high quality deal flow that goes to the next, if you will, piece in the supply chain, which is often institutional and capital investment from VCs. You know, and certainly what I have discovered is there are groups more and more now of these venture firms that are starting to see not only the success rates in studios that are like 30% higher than traditional startups, but they're also seeing, you know, they become connected to these studios, or these, you know, suppliers to them, if you will, of high quality deal flow. So, and that's one of the things we've worked really hard on in the studio at Nobody, is we want to build this sort of network of venture capitalists who know us well, who can come inside our studio, come inside our factory and see the companies that we're building early. It's actually one of the offers that we give to all of our angel investors, right? We've 125 angel investors. They get to do follow-on investments in every company we create. They get the first look at those deals. And then we go to our preferred investors, right? Folks who are following our story, that come to sort of the showcases that we do on a quarterly basis. So we're building out this supply chain, right? And when you pair that with that, the example you're also sharing of building these ecosystems, right? As you start to build one business, you start to see where there's other gaps in the market of where you're starting to build, be that hardware, and you sharing your insurance example.
Yeah, you're going from one gap to another gap to another gap to the next gap, and so on and so on. Yes, it's how studios work. Yes, it's
amazing, you know. And so I have to give a quick shout out here. We've so many people joining from all over the world, right? Like, this is one of the most fun things about. So I just want to shout out to everybody who's saying hi from all these fantastic countries that they are dotted around the world. As we go along, please put some questions in the comments. Dennis and I will try and speak to them as much as possible and give people a chance to sort of you know, share some of these questions that we're focusing on. Right. So for you, having built a lot of these businesses, you know, still one of the big questions and the point of this was unlocking early stage funding. So, you know, I shared a little bit about what we've been doing at studios, in Nobody Studios, and building out these networks early. What were some of the things that you did when you were working in the studios that you were working with to start thinking about bringing a lot of, you know, this capital and awareness and relationships into venture funding early to help you be successful as you grew?
Let me answer your question in a bit other angle, let's say so. What I think that is what is now extremely important is the position or role of a leading investor in startup studio. If we will look to the different types of investors now, family offices, just wealthy people, venture capital funds, and so on, funds of the funds, sometimes they are more and more understanding what studios are. And all our friends like Matthew, Max, and Attila, they are doing a great job describing the sense of the studios. But I think that they are still, this type of investors are still willing to find a leading investor that they will follow on. And that is why what I'm doing now is to building the new fund that will play a role of a leading investor in studios. And this fund should bring not only money, but also a network of money, of capital, but also the knowledge of successful building of studios in the past. A lot of good teams are now trying to start studios. That is extremely good. And mostly I think they will use money of angels and such type of early stage investors. But I'm now mostly looking on a startup studios that are quite mature. So that, for example, that built already a portfolio of 10 startups, 9 startups, something like this, and that will go for 100 of startups in the next 10 years. That is a proper ambition from my point of view of the team. I'm looking for a team who had already some experience in fundraising. You are telling me before we started that you just came from one again session of fundraising and so on, and everybody are doing this every day, day by day. And if you have this experience, it's one case. If you are just an agency who wants to make a studio, it's another case. So I think that is very important, the experience in exiting, because it's a good to fundraise, it's a good to build, it's a good to operate, but to exit is absolutely different story. And experience in exits, it's also extremely important. And the last point that I usually mention and I'm looking for, I think very important, is ambition in terms of, and motivation in terms of future capitalization of studio itself. I think studios will be a good objects for an IPO soon, because studios are mostly the regular companies. They are, in terms of venture capital, they are evergreen. Even if studio is creating a fund in a dual fund, in a dual equity model, but entity model, but the fund could be time limited, but studio is still evergreen. So it means that this foundry, this machine of producing startups could go to the stock market, to IPO, to raise capital from it, and to make a capitalization for its investors. I think for a new investors in studios, that is extremely important to look on these 4 or 5 main criteria.
Yeah, no, they're great points. Like one of the things I'm very aware of, and we constantly come against in our studio, is like, because venture studios are still an emergent asset class to a certain extent, having funders who will go first, who will lead the round, right? They're the people that are breaking the mold, and it's always hard to find the 1 or 2 people that are willing to take that risk. But like anything, as soon as you find the first person to lead the round, then everyone piles in afterwards really quickly, right? And it's
Exactly.
and it is happening. Like you said, there's a lot of great people, and they've even joined us on the call here today. You met Matt, mentioned Matt Burgess. Matt's diving in and been a show with us already. He's been great, and lots of different people have been contributing to educate, really, and raise the visibility of this asset class. It is one of the fastest growing asset classes. It is one of the most, I believe, obviously interesting ways to build startups. And as you say, as the asset class matures, as more case studies from examples you mentioned, like Hexa being very successful, Redesign Health. My first ever job was in citysearch.com, which was one of the first startups born out of Idea Lab, the very first venture studio. So, these stories are becoming more known, and the case studies people more aware of. So look, we've so many great questions and so many people from all over the world. So let's pick 1 or 2 of these and just try and answer them. So I can never tell if you've capitalized your name, so forgive me, everybody, if I pronounce your name wrong. But there's this question of, what advice would you have for looking for financial partners? And you're obviously doing something fascinating by starting to create a fund so you can be that, if you will, first financial partner for many of these startups when they're building from a studio. What you've sort of hinted at what you would be looking for, right? Teams that have exited, teams that have a background beyond just an agency with a small group of people working on a startup. You're looking for venture scale companies, is what I heard. What are some of the other things, if you come from the other side of the table, like you being that financial partner for some of these studios, what expectations are you going to have for them?
I think I could only repeat one last point that I mentioned. I think that the main question is how the liquidity will happen in the future for the investor. That is a question that any investor will ask about the startup studio model, because, okay, for example, startup studio will sell a few companies. Will they pay dividends for their shareholders, investors, or they will reinvest into the basic business? For example, when I was in a position of startup studio shareholder and CEO, I would definitely vote for a reinvesting, for a revolvers, and to build more and more and more startups. But the interest of investors is to get returns. So that is a question, and that is why I think that the compromise between dividend model that is quite tough for studios could be the IPO of studios. By the way, I think we should not forget about the Rocket Internet. It's a great example of studio, and from my point of view, I like it even more because they did copies, and I like this approach to be true very much. It's very clear. very straightforward. And sometimes people asking what are the names of the most famous startups baked by venture studios, and everybody are thinking about Moderna, or I don't know, about the Snowflake. But I think we should look to the regional startups. Do you know the main Uber in Brasilia? Who knows this name? And it's extremely good company. Do you know the main marketplace in Nigeria? Do you know the best marketplace in Vietnam that Rocket Internet built? Nobody knows this name. By the way, they sold it to Alibaba for 1 billion 8 years ago. So even 8 years ago, they did what we are talking now about. So I think we should look also onto the, not on the best companies of the world. I mean, studios is not for unicorns mostly, I think. They are for they are playing a different types of the model. It's not 5% of the exits from which half will be profitable as in venture world, in a venture capital world. They are looking for a 50% of exits, with probably less profitability on each exit. But in general, you are getting the pipelines of exits and return coming more, and the level of return, that is why is becoming bigger. I think that is extremely important to understand for investors. And from investment point of view, I'm looking for studios who understand these things, this type of model, that want to play this new type of the games, and not trying to, not trying to adapt as an accelerator, advanced accelerator, or venture fund that a bit builder. No, that is, I think, a bit not for investments.
Yeah, no, I think this is right on. Like one of the things a statistic we talk a lot about at Nobody Studios is that 80% of exits happen under $250 million. Like that's where they happen. So the notion of building companies fast at high volume, building them cheaply, and then exiting them for, if you build a company
affordably, building cheaply and exit affordably for a mass market. Companies for a mass market.
That's it, right? Like, we always say to studio, like, we'll spend $1 million building a company and sell it for 50 every day, twice on Sunday, right? That's a 50x return. And
exactly,
and then giving that back to your, distributing that back into the studio to build more companies and to your shareholders. That's what's very interesting for investors, right? Like, they want dividends paying machines, and that's the kind of stuff that we're looking at.
Let me add one more point here,
please,
before I will forget it. I think that also extremely important is the opportunity of studio to assess founders, not the ideas, but founders. When studio decided on ideas, then they need to find a proper to this idea founders in residence. And here they could use special assessment technologies. For example, we built a special business game in the past through which every candidate that want to play a role of venture builder, of founder in residence in our studios, in our startups, should game, and we assess them, their entrepreneurial skills, competences. So such type of assessment, professional assessment, never happened before in accelerators or in incubators, and never happened also in a corporate, let's say, departments. Yeah. And here studios, that is why studio could professionalize this foundership stage even before the pre-seed investors will appear. So just the ultra early or a founder stage. And that is why the money and the process that studio are showing is much better than usual founder with a family money or with a friend's money. Studios have much clever money because they make assessment, they have proper ideation, and they have a really venture building process on a extremely early stages. And by the way, let me show this book that you also mentioned.
Yeah, get the book on. Yeah, let's do it.
Like a venture builder. So that is a book about, it's a bit philosophical book. It's not playbook for that you could take and just act. It's a bit my thoughts how people in a venture builder role are thinking about. That is why I think studio could be much more successful than the traditional accelerators and incubators.
Yeah, like, you know, there is always this discussion that we lose so many great entrepreneurs when they are successful, right? They build a company, they exit the company. And you know, for many years, it's always felt like the path then is that they have to go and become a venture capitalist after that, because you know that's what people do, right? You build a company, you sell a company, and then you become a VC and give money to other people to build companies. And we're losing so much entrepreneurial talent because, you know, when those folks are not operating, sure, they can write checks, but are they hands-on? These people who've learned how to build companies the hard way. And again, what I have found personally with studios is it allows you to still be hands-on, to still be an operator, to still build, to bring your experience to bear and build equity in lots of different companies. And you know, I continue to see that. I speak to a lot of the folks. We're going to have another show in the coming weeks with some of the team from Redesign Health and Hexa and these fantastic studios, and they continue also to share examples where exited founders are now coming to studios saying, I want to build my company in a studio next time. And again, I think it speaks to the point you're saying to Denis, that the talent want to work with great people. They want to be surrounded by other entrepreneurs. They want to work on lots of ideas simultaneously. And studios are a fantastic opportunity for that. So in closing, we've had so many people, like over 50 people here, like live on LinkedIn, people here across YouTube, lots of questions, lots of comments already, just conversations even happening in the chat. So we just love seeing that. Denis, bring your book up again, because I think it's something that, you know, you only flashed it. I didn't think people had a chance to read it and make sure that they can get that at all good bookstores, all good places online. Make sure they get yourself a copy. You know, you mentioned it, that it's a philosophy that you've learned from building. You know, what's one of the big ideas that you want people to sort of take away after reading the book?
I think that behind the really interesting startups and companies, there is a quite straightforward logic. And I'm trying to open this logic and to separate different paths, different ways, different forks that entrepreneurs, novel entrepreneurs could take in order to be successful. So this book is mostly as a dialogue between more experienced entrepreneurs and new ones, and helping new entrepreneurs to make their orientation in a quiet, complex, in a simple way, but in a quite complex ecosystem of venture capital and in general technology business. So that is what the book about.
That's amazing. And we've even got everybody, you know, this is your Amazon link. I don't think Kaimar even put his referral link on there, so that's very noble of you. Go check the book out.
Thank you for checking this in Amazon. Yes, it's
I'm sure you're going to have at least 100 sales based on the amount of people that have joined us live today. Folks, do remember, we do this show every week. Make sure you follow Nobody Studio so you don't miss any. We're going to have leaders from Redesign Health, High Alpha, lots of studios in the weeks ahead. We're going to have some panels. So we'll get Denis back with some other leaders in the venture studio space where we can get some interesting dialogue going on across the piece. Denis, look, thank you very much for joining us today. You can see so many folks already sharing how much they enjoyed the chat. I think we've got people from every single continent, from Europe, Asia, Americas, Africa, who's joined the call today. So I think one of the great things about the venture studio community is as everyone's trying to help raise awareness about this emergent asset class, what's working, what's not working, and I think it's something really special. So yeah, Denis, thank you for sharing your knowledge and experience with us today. We look forward to having you back again in the future, and thank you everybody for joining us.
Thank you, Barry. See you soon.